Good morning, good morning. Ian, how are you? Hey, Cisco. Aloha. Hey, Dano. How you doing, brother? What's up, Flex? Donnie. Marcus, Tibby, how you guys doing? Oh, whole crew's here. Hey, Stealth. Moran, how are you? Well, happy Fed Day. What's up, Raj? Okay, so here we go again. Another Fed Day. Another disposition of inventory before the Fed, just in case. So, a couple of interesting things today. Hey, Travis, what's up? Yeah, the profile today is sort of the Olympic torch kind of profile. Welcome to the folks on YouTube. Good morning. Overnight inventory. Let me show you folks what's going on. Overnight inventory is long. There's a couple of things very curious here, as the private equity guys would say. There are single prints. This is from not yesterday, but yesterday's Globex. So this is from Sunday night. So this is a short position from 67.65 down to 55. And you will see tonight there is what we call a poor low, which is right at yesterday's low, which is right on top of these single prints. So that's the short position, and it's being used right now. We filled this set of singles yesterday when we came down. We had a B-shaped profile, and we had liquidation at the end of the day, but that liquidation has been taken. So the markets are working well. We're taking this stuff and now we're selling it up here for profit before the Fed. Right? Now think about this. Why is that happening? Well, you never know what's going to happen on a Fed day, right? So say you were a wholesaler and you were long size. Say you were long a couple of thousand contracts, right? Into yesterday's liquidation. Wouldn't you want to get cashed up at night and get rid of that inventory at night for profit? So you lighten up your inventory. You turn what you bought into cash so you can be a little bit more fleet-footed when the Fed comes out. You guys understand that business theory? Right? If you had to spend a lot of money yesterday at the end of the day, you would want to try and cash up at night. That's what Globex is about. A lot of traders mistakenly talk about Globex and they talk about the Asian Open and this Open, and they focus on that too much. But what they don't realize is the Globex or the night session allows traders, if you get long at the end of the day, to get liquid at night. And if you are short at the end of the day, you'll notice usually after a market runs up at the end of the day, it backs off during the night and it allows people to cover their shorts. Right? So if that situation doesn't happen, that means there's some change. That's why we look at overnight inventory. And this, my friends, this is something you're going to want to learn because Very soon, we're going to go to 24-hour stock trading. So a stock like Apple, Microsoft, these deals are going to trade overnight, and there is going to be overnight inventory, and it will affect how those markets trade when they open. So if Apple closes low and overnight moves up higher and then comes back down, that is overnight inventory, right? Traders who don't understand what inventory is, well, they're not really going to be successful, because how can you trade something if you don't know where it's priced? How do you know if you're buying something too high, right? Say like you're going to buy a watch, and you want to flip a Rolex, right? And retail is 20 grand, but they're selling for 30 or 40. Can you buy it at 30 or 40 and then flip it at 50? Maybe, if it's really high demand. But wouldn't you rather try and buy it at retail or at wholesale and then sell it at retail, right? That's just simple business. So traders who know where stuff is priced, they can make better decisions. And that's why all these people tell you to be patient. But they don't tell you why you need to be patient. You get what I'm saying? Nobody ever tells you why you need to be patient. They're all saying be patient, and you guys are like, F this, I don't want to be patient, I want to make money. But if they told you, listen, right? If they said, listen, hey, be patient because you need to wait and see where you can get the best deal, wouldn't that make more sense? Crickets. Okay, cool. Right? If you understood the why, I think you guys would have a better chance of being able to do proper business, right? Instead of just kind of like flailing about, you know? And that's what happens, unfortunately. People just end up flailing about because they don't know why they're doing business. They don't know why they're being patient. They have no idea what the hell's going on, you know? So this way, now, if we go and draw, let me go show you the balance zone I did. The balance zone I had to use the balance from yesterday. Here. Okay? I use that because we're in trend. Do you guys see a balance? So this is a great example for people who, they're like, JJ, I can't find a balance zone. I'm like, yeah, I couldn't either. That's why I used 72 and quarter to 78 three quarters from here. Right? I used this. Right? I used this area here because this is all trend. There's a little balance here, there's a little, but this is crap, right? So it's okay. You can use the balance zone from the previous day because if you think about it, it makes sense, doesn't it? Because this is where the inventory was priced yesterday at the end of the day, right? End of the day, the inventory's here. We go sideways here for a little bit, and then boom, straight up to sell it, right? The truth of the matter is there are not that many large traders in Asia that are trading this or traders here. Most of this stuff, all the big traders are North American based, right? The size traders, right? So they're taking their inventory, they're raising price when they see buyers come in so they can get rid of their inventory. Very simple stuff, right? So that's really what's happening. Now, if you are looking for a short, you want to be shorting it. This is your 4 times cost basis. So this is how much the stuff costs. This is 2 times profit. This is 4 times profit. So do you really want to be buying it up here at 68, 12, 13? No, right? You don't want to buy it at 68, 12, looking for 68, 25. You want to get it when it comes down and you get a discount, right? This is where you're looking for shorts when London opens. And you see how it's going back and forth above yesterday's high? That's the shorts coming in and buying. You can see the volume starting to build out. Even if you don't have volume profile, you can see time being spent. Time means volume traded. So if you don't have volume profile and you see a cluster of candles like this, that means time is being spent between 68.06 and 68.10. So in that 4-point range, what is going on? This is distribution. This is distribution of the product that was bought here and here and here. They're getting rid of it here. Who are they selling it to? They're selling it to the short sellers who are coming in, and look at that point of control. Check it out. The point of control is where 70% of the cost basis is priced. It was down here at 68, 67.85. Now it's moved all the way up here to 68.08. So the short sellers are coming in and covering, and they're buying size here because that's where their stops are taken. That's why you have size at an overnight, in the overnight, right at the previous day high. That is not a coincidence. That is business. So if you understand that, now say you're looking to take a short, I'm watching 68.10 half because that is an area on my half-hour candle chart where there have been sellers. If you look at it, there were sellers here for an hour and a half. We got up here yesterday and they front ran 68.10. Here we've done a look above 68.10. If we can't get over 68.10 and a half, we are going to backfill this move and you'll be looking for that 67.90 area if you're a short seller. Do you guys, Cisco, does that make sense? So if you're building a short position here, you're going to be using yesterday's high as your warning level, and I would use 68.10 as your out. Now, if you're feeling like Daddy Warbucks and you really want to spend money, you can use that overnight high, which is a double top, which means they're selling here. So if had I been on the ball, I would have been short 12, covering 6. But I was making coffee when that happened. So if you're short underneath yesterday's high, let me take a test short here. Now, for those guys who say I don't show my DOM, right? I'm putting orders in, so I'm putting an offer in at 6.5, 6.25. I'm a little low, and 6.75 on the micro. I'm short one at 6.25, offered at 1.5 3/4, and I'm going to put my stop right here where that point of control is at 8, 8.25, right? So I'm going to let that trade work for maybe a point. I see that there's some buying down here. It's not the best trade location, okay? So I'm short 2 now at 68.0638. Let me go put a bid in here. Do you see where J period took the high of I at 5? I'm just going to go put a 5.25 bid in and see if I can get some product at 5.25. Right? This is a test trade. So full disclosure, I'm short 2 contracts at 68.0638. I got a sell order at 6.75, and my first stop is 8. I've got a bid at 68.05 quarter, and if the market starts getting over 68.07, 68.07 quarter, I might be in a bit of trouble, right? I need sellers to come and offer now under 6. Does that make sense? Does everybody understand the trade I'm taking? I'm not taking this trade to buy a private plane. I'm taking this trade to see whether my brain is working. And whether or not, and I do acknowledge that I am in not the greatest trade location, right? I should have been short at 8 or 9 against these 10s. That's what I should have been, right? So there are singles here. That's right, Dave. There's singles here. There is a short position. So it's at 5 3/4. I'm going to put another bid at 5.5 because I'm only short 2 contracts. I'm just curious to see whether I can get a fill. If I cannot get a fill, then I know that they don't have to sell under 68.06. Does everybody understand the logic? Right? So I'm short 2 at 6.38. I've got a bid at 5.5. It came down to 5 3/4, and I could not get filled. And the market is now back to 6.5, which is above my entry. Now it's down to 6. There's 5 3/4. Let's see. Can I get a fill at 5.5? No. So I am going to hit the buy ask button, and I bought one back at 5 3/4, and I'm moving my other bid up to 5.5, and I'm flat. There you go. Right. So that's what I'm doing. I'm testing my brain to see whether or not what I think is going to happen is actually going to happen. I limit my risk by using the micro when I first start trading to make sure that, say if it went against you. Yeah, I know my DOM's not showing. My client's name's on the DOM, AO. That's why I don't show the DOM, right? That's why I was calling out the trades in detail, right? I'm not going to show you my DOM because I have client names on the DOM and I don't want their names to go out all over the internet. Do you guys understand that? Okay? That's why I don't show my DOM because I'm trading other people's accounts and they want anonymity. They don't want to be all over the internet. So that's why I do that. Okay? But I called out the trade in advance. I told you exactly the executions I was taking. And I'll do that from now on. And when I scrub a trade or I take a loss, you'll know, right? So now I'm looking for that 68.03 1/4, right? And I'm doing that because yesterday we had some snapperhead came out and called me a furu or a guru, which is hilarious. It's hard to be a guru when you're 58 years old, right? When I think of a guru, I think of somebody who owns a cult and, like the Moonies. uh, right, so there we go. I'm not loud enough to be a guru. I know. I know. And I don't have a Lamborghini. I don't know if I could even get in and out of a Lamborghini now, Charles. Do you see that video of the old guy who's got the Lamborghini and he's trying to get out of it? And he has to like crawl out of the Lamborghini? That is so funny. And when I see that, I'm like, yeah, that's me probably. I would have to crawl out of that thing. I don't think I'd even fit in there. I mean, I have lost 44 pounds, but I don't know if I'd even fit in a Lambo. Ugh. Yeah, I had my Porsche thing in the 30s. I got the Porsche thing. I had a Porsche addiction in the 30s when I was in my 30s. And then 9/11 happened and I had to get rid of everything that was expensive. So, now I think I'm more of an old Bentley guy. 5'6"? Be a lot easier getting clothes, KK, if I was 5'6". One of the young guys in my building just bought a Porsche. He's in his 30s. He's going through his midlife crisis. Just bought himself a brand new Porsche convertible. Beautiful car. Unfortunately, the roads in the UK have so many potholes. Oh my God. Oh, you got to get it out of your system, right? You got to do it. You got to live. Buy the fancy car. Now, on San Diego, that's the place to have a fancy car. Beautiful roads. Hey, do they still have Symbolic Motors in San Diego? That's where my clients used to buy all their cars. You guys used to have the best roads in Hawaii. Well, that was the 80s. It's been a while. I haven't been to Hawaii since 95. It's a long time. That was the last vacation I took. Good God, could these candles get any smaller? My goodness. Jeez, business is slow. See how it slowly drifts down? So you take the market up and then you just slowly, slowly, it's like watering a plant gently. You just gently fill those lower bids. Really? Oh, that's too bad, Dano. I didn't know. I thought you guys used to have the beautiful roads, right? You used to have those Ferrari, Magnum PI Ferrari roads. Get on the H1, poly highway, nice and smooth. Do I ever trade NQ? No, no. You know why I don't trade NQ? Because it's a thin market, Aaron. Like the ES right now, if you look at the order book in the ES, like 20, 30 contracts at every tick. What's the NQ got right now? It's probably 6 or 7 contracts aside. I don't even have an NQ chart up. I don't like trading thin markets. And it's not that I trade a lot of size, but they bounce up and down too much, and they're just too much of a hassle for me. So, my whole thing in retail trading is to trade one market really well, right? Now, we do have people who do trade NQ in our room, and some do it well. Not a lot, though, right? There are not a lot of people who trade NQ well. There's a lot of people who do trade NQ, but about 99% of them really suck at it because they don't know what they're doing and they don't have the money to do it. So I I highly recommend for new traders to not trade NQ because what happens is people get bored with a market when it's slow. They're like, "Oh, I'm going to go trade this." Well, it's not a joyride. It's a business. I like knowing one market and one market well, right? That's sort of my goal, right? Gold is very thin, right? I like to make life easier, right? I find a lot of retail traders really enjoy making life more difficult. right? I'm not into that, right? At my age, I want a nice, slow market, one that I know really well. I can just trade it, make a little bit of money, go chill out. I like the ES. I know when to leave it alone, like right now. If I was positioned short, I could still be short, right? If you were still short, that's cool because you could see the offer. The sellers were here, then they moved down, then they moved down, then they moved down. So I'll be looking at these lower stops here. Now, I don't want to dissuade you from trading the NQ. If you've got like a $200,000 account and you've got some skill, go ahead and trade it, right? There's nothing wrong with that. But if you're trading a funded trader account and you don't know what you're doing, just don't bother. Just learn how to trade the ES. You can make 5, 10 grand a day trading ES, right? You just have to work at it. You know, in my one-on-one coaching, my best guys make 4, 5, 6. Some of them make 10 grand a day. You know, they didn't start making 10 grand a day. They started, learning how to make $100 a day and keep it, and then they scaled up. Nice, Cisco. Nice. Beautiful trade. Now, we're looking for the bid. London's going to open in what, 30 seconds? Let's see where that bid comes in. Here we go. Now, I'm short biased because overnight inventory is so long and it's correcting, right? VWAP would be nice. VWAP down here at 92 would be a beautiful short. Taking its time. Curious on your thoughts of overall market structure on larger time frames. So they push price up, down using a mix of limit and market orders. No, that is completely wrong, Aaron. Price gets moved up and down. Oh, sorry, no, that's not Aaron, that's TP. Um, no, nobody pushes price up and down. So wholesalers have inventory. And if buyers come in, they will raise price. If sellers come in, they will lower price to compete with the sellers. That's why markets go up and down. So pretend that TP, you bought 1,000 apples and you paid 10 cents per apple. And you're selling them at 60 cents. Okay? And then Aaron and Frankie and Juan and Muhammad and KP, they all come in and start undercutting you and they start selling at 59 cents. What are you going to do? You're going to go 58. Then they'll go 57. Do you understand how price goes down? It's just like when Walmart competes with Best Buy or something else. Curious on my thoughts of overall market structure on larger time frames. Can you kind of, I'm happy to talk about it. So market structure means inventory, right? Aaron, so here you can see that inventory over the last 4 or 5 sessions is all under 67.75, and we are distributing that inventory above. So if we have to, we'll discount the inventory and get underneath 67.75. Make sense? Pretty simple. Now, are you talking market structure as the way they're built, or market structure as the structure of the transactions? Weekly and monthly? The monthly chart, my friend, is still showing signs of life. Because even though all the inventory is long over 68.07, we have not been able to get underneath 66.21 in the new contract. I am expecting some selling up here. And if we don't get it, we're going to do this. And that's just because that's the way these markets are built. These markets are built to stay up and mark up inventory. Any of you guys work in accounting? Do you understand what mark to market means? Right? So if you look at Apple, right? It trades what, 40, 50 million shares a day? And it's got 16 billion shares in the float. Right? The people who own Apple, the trillion-dollar funds are holding it for like 30, 40 years. So every time we get a liquidation, if you look at a weekly chart, every time you get a liquidation, all you're doing is you're taking out margin players. That's going into wholesale hands and being redistributed to new margin players. Does that make sense to you? So if you're looking for a longer time frame scenario, 68.07 is your big number, my friend. And we're right there right now. If we accept over 68.07, right, be careful on the short side. I'm expecting some selling. Right now, I've been a seller my whole life, so I'm always expecting selling, and it just blows me away that this market just when everybody gets short. You guys notice that when everybody gets short, all of a sudden the supply just runs out? It's kind of interesting. Right. 68.07, oh, it's pretty simple. Look, 68.07, front run, look below and fail, look below and fail. Finally, we got underneath it, and now we're right back up at it. It's really simple, ImuCast. All you got to do is pay attention. Most people miss a lot of details on charts because they're looking at this indicator and that indicator and this and that, and they don't concentrate. Now, if you concentrate, check it out. You know there's going to be a seller here, right? Watch. When the market goes down and comes back up, the first thing I'm thinking is where the seller's going to step in, right? And there they are. Look, they sold there, and they're selling there again. Yeah, Raj, you know all the higher time frame. Raj, until you see 400 million shares of Apple go across the tape, the buying is sticky, brother. Even those swing traders, that stuff is sticky buying, right? Sticky buying is a concept that you guys don't understand because you've never paid anybody to buy your stock. See, that is a concept that we talk about all the time. If you are paying somebody to buy your stock, right? So say I pay you, I say, listen, if you can bring in 5 million shares of buying, I'll give you a million shares. So I'll give you a million shares for free if you can bring in 5 million shares of buying. And if you bring in a million shares, say the stock's at $5, and I go, okay, listen, bring me 5 million shares of buying, I'll give you a million shares. How much of that buying, if I sell 4 million shares of stock from $5 to $6, when it breaks $5, how many of the people that have bought it are going to puke out and how many are going to hold it? This is a concept called buying retention. Now, this is a concept that is not taught in any other trading room, mentorship, or anything. No, it doesn't depend on leverage. It depends on the buyer. So if you have different types of buyers in markets, you have flippers. We are flippers. We flip in and out. Then you have people who buy and hold because they've got more money and they're longer term buyers. And then you have investors who buy, and those are the best kind of buyers to buy your stock because they buy it and they put it away for 5 years. Right? So that's what you're looking for. You're looking for, when you're in the old days when we do deals, you'd want high net worth individuals to come in and buy the stock. That's why Jordan Belfort did well, because he suckered rich people into buying shitty stocks and they'd hold it forever and not liquidate. So that's why we sold billions of dollars of stock to Germany in the 1990s, because in the 1990s the Germans had a law that said if you bought a stock and you held it for 2 years, you wouldn't have to pay capital gains tax. So what we did was we opened boiler rooms in Berlin, in Frankfurt, all over Germany, and sold US stock to German people, and it went away and it never came back. So imagine if you could sell $1 million worth of stock at $5. That's $5 million, and you never have to buy it back. That is the concept of buying retention. So every time a market drops, I always think, how retentive is the buying? Are they going to hold? Are they going to puke? Right? That's why in penny stocks, they go up one day and they come down in the afternoon, because everybody who buys that crap is a flipper. Do you guys understand the concept? Yes? Cool. Okay. The ES and these markets have very sticky buying because interest rates are low. People get massive amounts of leverage. And all you do when you take a market lower like we did here is you just flush out the margin people. And that's where the leverage people cast come into play. Everyone who was long above 6807, who was what we call weak hands, not deep pockets, they get liquidated out. So the liquidating inventory gets taken into wholesale hands. The short sellers come in and cover under 61. Wholesalers build a position from 61 to 74, to 49, and then we come in and they get to sell what they bought here and here up here. It's just like a used car lot. You guys ever bought a used car? I do prefer to trade higher because the market is built to go higher, right? The market is built to go higher. If I came to you, Aaron, and I said, listen, Aaron, give me 10 grand, right? Give me 10 grand, Aaron, and in 3 years you're going to owe $300,000. You're going to be like, yeah, that's not really the best deal. But if I said, give me 10 grand and in 3 years you'll make 40 or 50 grand, that's something that you would go for. Yeah, the market is built to go long. If you guys don't understand that, you're missing a huge concept in finance. Why the hell would anybody invest money, right? Why the hell would you invest money in something where you're guaranteed to lose it? It's not really like even an absolute moron would think twice, right? And Cass, we're only concerned about liquidating the position that we're trading, right? I don't care what they're liquidating or what their account looks like. All I care about is the ES. So I'm not thinking about their whole accounts and all of that because that's a waste of your brain power. Focus and concentrate on the chart in front of you, right? 10 sellers there, Cisco. That 10 sellers been there. They were there 3 days ago and they're back, right? The world situation has nothing to do with how markets are structured, Cass. What I suggest is you come into our trading room and I'll teach you. I'll teach you how markets are structured. I'll teach you how deals are done. And then you'll actually have some knowledge. Because markets aren't structured for the next 3 years. Markets are structured for the next 40 years. And they're created by trillion-dollar institutions. So you have a very small worldview compared to somebody who's managing $13 trillion. That's what you're missing. Right? And I suggest for all of you folks watching on YouTube, right? You've got we've got a 3-day free trial. Come into the room, and then you see the questions that this fellow's asking, right? So when was the last time the U.S. economy failed? And if it does fail, how long is it going to fail for? So if you own Microsoft or Apple, and you own 600 million shares of it, and it's paid for in cash, and you're holding it for 40 years, when the U.S. economy fails, it will recover. And do you understand the concept of time frame? Right? Once again, you're thinking in a microcosm. You need to expand your thinking. Right? Because people were thinking stuff was going to fail at COVID and stuff was going to fail in the 90s. But the smart money bought Microsoft at $40 a share, and now it's 400. Do you understand that? Everybody's waiting for the next Great Depression. It's because they don't understand how markets work, and they don't understand how business works. And that's why there's dumb money and smart money. And what I want to do is I want to take dumb money and make them smart. Right? Cass, come into the room for 3 days. It doesn't cost you anything. You might learn something. Right? I've seen you on YouTube. You flip in and out. You ask a lot of questions. Come into the room and ask them. Try it out for 3 days. You got nothing to lose. There's that seller at 10. Right? We'll teach you where to sell, where to buy. We'll teach you why. Right? This is the only trading room that'll teach you the business reason for the trade. Right? That's pretty much it tonight, folks. It's kind of back and forth. We're still distributing. I am short biased, but right now I'm seeing bids at 5 and 6, and I'm seeing that 10 seller. So what really is the question is, Do we bring in enough people that we can raise price over 10 and stay there? Because the last time we did, it was only for 1, 2, 3, 4. It was for maybe 10 minutes up here, right? So let's see, we're in a distribution balance. Okay. And for those of you who are wondering why the markets never go down forever, I've done videos on them. I've done 400 videos on this YouTube channel. Check them out. Right? I've done a detailed explanation of why this market is built this way and why it trades this way. See, and I'm also doing a class on investing as well for the people I'm mentoring. You have to learn how a company is structured will affect how it trades, and who owns the stock is going to affect how a stock trades. So there is structure. When you structure an IPO, right, you determine how much stock is going to be put in the system. And who owns that stock will determine how the stock trades. It's pretty cool. Here are all the short positions in tonight's profile. We got quite a few of these little bastards. Look at that. These are all areas of single prints. These are all short positions. We have a lot of short positions in tonight's profile. This explains why the market is doing what it's doing. Look, you got 1, 2, 3, 4, 5. You have 5 distinct, obvious short positions. And we are distributing, we're using the shorts as leverage to hold the market up so the large size traders can distribute what they bought yesterday down here, up here. And there you have it, folks. That's it for me. We will see you at 9 a.m. Eastern Time. Thanks for being with us. Gracias, Juan. Stay out of trouble. We will see you folks later on in the morning session at 9 a.m. Eastern Time. Stay out of trouble. Don't take candy from strange market makers. If you really want to learn how to do this, if you want to learn how to make money, give tradingsyndicate.org a try for 3 days. They've got a free trial. And I promise you, you'll learn more in a month with me than you will anywhere else. And that is a promise. Thanks, everyone. Have a wonderful day. Bye for now. Appreciate you guys.